All right. Welcome. Another day that we're gonna go look over the market together, see the trades that I took, see the trades you could have taken, see what I did wrong, see what I did right, and we both learn from our lessons. And let's just get straight to it. You guys know I don't like to talk too much. Hold on, let me fix this for you guys first. All right, boom. Shrink me. And let's get started. So today, I always tell you guys, we like to start on the daily, see where we're at. We are at all-time highs right now, so I don't really want to be shorting. But I said in the video before, and I'm going to say it again, if the higher time frame, such as the 4 hourly and the hourly, gives me good confirmations and multiple confirmations for me to go the opposite way while we're at all-time highs and take short lows, then that is what I'm going to do. And that's what we did today. I took one trade today. We pretty much got stopped out at almost break even. But that was simply because I was in the car on the way to I was actually on a scooter on the way to a class. And and there was an SMT made, and I'm gonna show you guys everything that was done, and I should have taken profit. And to be completely honest, I don't know if I would have taken profit if I was sitting on the chart also. But I recognize that after, and that's also something you guys should recognize too. But look at the daily. All we can see here is all-time highs. There's this fair value gap that I also marked yesterday. Dropped to the 4 hour. There, I'm going to just take off the daily gap because it's not really useful. And there's the new week opening gap that I've marked, as you guys can see right here. But yeah, so let's also look at the news today. There it is. News today. We had Powell spoke in the morning, or this is like lunchtime. 11:35 my time, which means 12:35 New York time, which is lunchtime. So me seeing that, I told myself I will not trade the AM session because of that, because it's going to be high consolidation, and then we're going to sweep consolidation and have a real move after Powell speaks, because that's whenever the market's going to know what Powell is saying. Before, the market and the banks don't really want to be entering because they want to see what Powell's going to speak about, rates and things like that. So what we have to do is be patient until he speaks, and then we can trade after. All right, what did I see here though? This was the candle that I saw developing, because it's the candle that closes at 2 a.m. and this is 2 p.m. and starts this candle, the 2 to 6. So this candle was developing here on the 4 hour inside this area. It started off here and then it went down to this gap. So whenever I was looking at this, I'll initially just show you guys what I started looking at. I saw that we were, first of all, this candle right here hadn't fully formed, this one. So we were kind of in this area where my mouse is. So we were in this fair value gap. Dropped to the hourly, we were also, we were above this fair value gap. We weren't even in here, but I had that marked as a good possible sell side, and we can go up and take out this consolidation, these relative equal highs here, or the highs made in the AM session. I'm going to do this. Let's just put this in replay real quick. Boom, just to show you guys what I'm seeing. I'll take this off. Yeah. Okay. We're looking at this, and now we're in lunchtime, and there's 1 o'clock. 1 o'clock goes and sweeps that lunch low, the 12 o'clock low, once 1 opens. So we're after lunch, so now we're looking for trades. And I'm bullish because we're all-time highs. Before this candle had fully formed, we were in this fair value gap, and then we also had this hourly gap here, and then we could have targeted the consolidation that was formed during the AM session and lunch, which is all of this area right here. We could have targeted the buy side of this area. So I saw this happen. I dropped to the 5-minute, and I wanted to see some sort of 5-minute breakup structure to give me the model. Nothing yet. Boom, still nothing, but now we're under here. Okay, new week opening gap, what we could do is we could come up, form a high here, come down, and then go back and break that. None of that happens. So now I want to kind of monitor where we're at. Where are we here on this hourly candle? First of all, at this time, whenever we came this low, it's 130, still playing around here. It's like 145. So there's like 15 minutes left until we get this hourly close. And I kind of want to be patient because now we're not in a very good situation because we've made a big wick down. There's these low resistance lows right here. I'll mark these out. Low resistance lows right here. So this could be like an easy kind of sell side level to target. And there's this kind of wick up right here, which I don't really like. Okay, and I'm not going to go on this short 1 minute and enter on a gap here because that was a mistake I did yesterday. I'm not doing the mistake again. But here also what I wanted to really see was this 4-hour fair value gap get respected as my sell side level, and that would also mean we are still respecting the new week opening gap on a higher time frame. So I really want to just see where this 4-hour candle closes, and we can just play that until 2. So we're just gonna be patient. There were patience, nothing to really rush for here. Oh, we skipped over. Where is it at? And there's 2 o'clock opening right there. 2 opens and pushes up into that 15-minute gap. So now, if I take away this 2 o'clock open, whenever we're looking at this is what we were already looking at. That's what I didn't realize. Next candle is going to be 2 o'clock. This is the close, and the next candle starts 2 o'clock. So now this is also the 4-hour candle close right here. So that means we inversed this gap. So that's what I saw. We inversed this gap. And on the hourly, we're not really respecting too much on the hourly, just this inverse. But what I don't like seeing is just the fact that there's such a high wickage here, and we are very deep in this range. Okay, this is optimal trade entry level, but us disrespecting that 4 hourly shows me that we could run this short-term low right here that we see. So that 4-hour really gives me a lot of what I want to see. Now, this was the 4-hour that was inversed. I'll do that right there. And then there's this 15-minute gap. Okay? That 15-minute gap, let's drop to the 5. So next candle is going to be 2. What makes me like this more is that this is going to be a short-term high that we're going to run, right? 15-minute gap, and now we can target this low that was made. Okay? That could be our sell side level with our low resistance liquidity level that I had marked here on the higher time frame, right? As a draw on liquidity. Okay, so that right there is a draw on sell side liquidity. And that's going to be kind of a short-term sweep on this high inside the silver bullet time, just like yesterday. Silver bullet time is an ICT concept. It's between 10 to 11 a.m. and then the 2 to 3 p.m. This is all New York time. You kind of want to run a short-term high, and then after that, look for a fair value gap break of structure to appear on the lower time frame of that, and then target the opposing sell side or buy side liquidity. So, in other words, I'll represent that here for you guys. Short-term high, run it, and then target opposing sell side liquidity. Let's drop to the 1 here. Let's just wait for this model to appear. Okay, so now we created a low here at 2. And boom. So now we've swept that buy side, that short-term high. What am I looking at already here? I'm already looking at this low to see it broken. And I want the body to close under here to give me a change in state of delivery also, which means an order block. But for it to be valid, you need a fair value gap. So just add all that stuff together. What do we see? Boom, fair value gap. This is an order block, change state of delivery right here. And just so you guys can see, also we came under this low, so that is also a break of structure. So now I'm gonna go in on this. Now here I'm already putting my limit. Boom, limit on this. Stop above the high. What am I targeting? I'm targeting this low. Another confirmation for me to target that low. What is another confirmation for me to target that low? Let's look at standard deviation. High of the low of the sweep of liquidity leg. Standard deviation, which is the -2 and -2.5 level, it's right under this liquidity. So there is a high probability that we run down into this level. Let's take this off the chart. Boom, take this out of here. Now we're just going to wait. Once we get in here, we're going to I risked 1% because of the first trade I've taken for the day, and then we're going to short down. Boom, boom. We got in right there. Once we're in here, now I'm just waiting to see price come down to that low. And my stop is still above this high. I told him what I am doing is I'm not moving my stop unless it hits a take profit or it comes back for the higher time frame reversal, it then goes back down. So we're still in this trade here. It comes up, comes up. It comes up to our break even. Why am I not scared? Because there's this right here order block that you can see. So that's a good level for us that we're respecting right now. I'm still in here, not too scared. All right, that's whenever, I'll be completely honest. Right here's whenever I got super kind of worried, but we're still respecting the original fair value gap that we entered off of, which is really, really good. Bodies are respecting. And right there is whenever I was like, okay, this trade is going to pan out. Once that candle happened, broke this low off of that fair value gap, the initial fair value gap, I was like, this trade is going to work out. Let's just keep it going. So once we broke under this low right here, I also did go ahead and move my stop above that high. Why? Because there's a small, actually, looking back, I don't even think that's a gap. High, 808, low, so that wasn't even a gap. But I'll be completely honest, I did move my stop here. All right, back to the 1 minute. So it gets really choppy. And another reason that was good for me to move my stop is because if you look at this, kind of just the model happening again. What do we see? We're sweeping these. Don't like that. We're sweeping these highs right here, breaking structure, changing state of delivery, come back. We should respect this leg right here, respect this area of the break of structure leg, and then move down. What do? We come up, boom, boom, boom. So this is whenever I saw this and it hit this previous low and wicked back up. So I was kind of worried whenever I saw that, but then that's whenever I got on my scooter. So I was like, okay, this is going to play out. I'm just going to let it play out. I'm going to still wait for price to hit right there. Right? I'm going to just move this back. It's kind of annoying me. All right. So whenever I'm seeing, so far I'm really like, this trade is going to work out fine. But what I did do is right there, I did move my stop to above right here. So you're also learning about stop movement here. You see how I'm waiting for 5 minute higher time frame confirmations for me to move my stop? Like this is just the model happening again. Another 5 minute break of structure. There's a little gap in here which validates this to be an order block. So like connect the dots. It's just you're moving your stop because the model is appearing again. But then right there, let me do this. Boom. At 259. I'm going to go onto here. 259. You can see that price went and swept that low that I was targeting on NASDAQ. Right there. The 141. 141. So now we've hit it on ES and not NASDAQ. But I was on the scooter at this time. And why should I have watched ES whenever it hits that level? Because if you look at the initial, this was the initial right here. Here you go. That, the 150 and then the 202 sweep of liquidity. This was an SMT. And then those same times here. And then 202. Boom. So you kind of see how that shows that this is weaker. So what could have been a good trade was for me to enter on ES because it's weaker. Keep a stop above there and target these lows. Or what I did was also perfectly fine, but just once I saw price hit here on ES, I should have taken off at least partials on this candle coming right into here and going under this low. But what I did do is I left that stop right there. I was back in class and I was just letting it boom. And it came and it stopped me out right there for like $100 in profit, which is not bad. It's a break even. But that's pretty much the trade of the day. That's exactly how I was executing. That's exactly how I was viewing the markets. And that's all the confirmations that I saw today to give me the short and the reasons I didn't trade the AM session. So I want you guys to learn something from this. Watch this and really understand what I'm saying. Don't just watch it because it's like a movie for you guys. This is very informational. I'm dropping some very good information. I'm sharing my real what I'm doing. And I'm showing you guys losses, I'm showing you guys mistakes. I don't really care to show you guys the mistakes I'm making or to tell you guys the mistakes I'm making, but here it is clear for you guys. I literally told you guys I stopped at break even, which isn't something to be proud of, but I'm still going to make a video on it and still teach you guys something from my lessons that I'm learning every single day and from my trading that I do every single day. So I hope you guys the best trading. Have a great day, have a good night whenever you're watching this, and I hope you guys tune in for the other videos that I start making. And I'll see you guys later. Peace. D Mike out.